This week on the VC React podcast, we're talking money, power, and some serious contradictions in tech and startup funding. Anthropic said no thanks to GCC capital last year, and now they're like, Yalla habibi, we need your money. We ask, is this honesty or hypocrisy? And how does the word C mean a capital and why? Elon's xAI is looking at Saudi for a massive data center expansion and choosing between a ready small option and a mega later one. When it comes to building AI infrastructure, do you go for speed or scaling? And can Saudi talent benefit from such projects? Qlub raised $30 million and is already operating in 11 countries. Is this what fast, software-only fintech looks like? Or is it a shiny feature that bigger players like FWDstart could copy overnight? If not, why? And finally, 500 Global is launching a $300 million sustainable growth fund out of Abu Dhabi. Is this VC, philanthropy, or something new? We will talk VC as a service, startup-style VC firms, and what this shift means for the future of venture. Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Seksek, an angel investor and host of the ABEZ show. Amer Nasereddin, VC at Fikr Ventures and board member and co-founder at Yaseer. Chada Benmahcene, CEO of ENTROGX Ventures and co-founder at Women Collective, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites.
We're delighted to welcome our new presenting sponsor, xAI. Great founders build world-changing companies, and they do it by being relentlessly efficient. They obsess over every dollar spent, and the smartest investors back the ones who make every resource count to drive the biggest outcomes. That's why so many founders use xAI. It finds hidden savings in your AWS bills, sometimes up to 75%, freeing up capital for growth, hiring, or simply building faster. See how much you could save in 60 seconds and how much further your runway can go at xAI.
This episode is brought to you by Okta, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
Okta changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, Okta's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use Okta. Okta learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Cream, Lean Technologies, and Outgram rely on Okta to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use Okta. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareokta.com. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Hi, Jamie. Where do you want to start today?
Let's start with the hypocrisy, I think, that you mentioned there in your intro. So from context on this, I have a terrible habit whereby when I wake up in the morning, irrespective of what time it was, I just by reflex always go onto X immediately and quickly scroll to the timeline and came across this story pretty early after it broke. Original reporting was by Wired, who this particular memo from Anthropic CEO Dario Amodi was leaked to, and thought, holy shit, okay, this is mad. So for some context about this, as you mentioned in the intro, Ahmed, the morally puritanical and squeaky clean Anthropic, who's definitely, never taken money from any morally suspect firm in the West, all of a sudden has a colossal issue with taking any money from the Gulf. Back in 2024, they mentioned that they declined funding from a Saudi Arabian firm of some description over national security concerns, but they've now quickly changed their tune as OpenAI and X, which we're going to talk about in a while, or xAI. And was also in discussions with Humane in Saudi Arabia for additional server capacity there. All of a sudden, they're stuck between a rock and a hard place, and they seem that they're going to fold, and they all of a sudden they want the money from the UAE and Qatar so that they can remain competitive. So in terms of the Slack messages that were retained by Wired, Ahmad wrote, unfortunately, I think the idea that no bad person should ever benefit from our success is a pretty difficult principle to run a business on. And he added, there's a truly giant amount of capital in the Middle East, easily $100 billion or more. If we want to stay on the frontier, we gain a very large benefit from having access to this capital. Without it, it is substantially harder to stay on the frontier. Interesting.
You know what, Jamie? I can understand the national security part because they don't want to become the next TikTok. I mean, having foreign governments as shareholders, and then the politicians and the Congress would decide their fate and ask them to sell to a local entity. But the bad person part, this means that, hey, they think your money is dirty until I'm desperate for it. And then, like I said, yalla habibi, come to Anthropic. What do you think? Let's start with Amer.
It's really interesting how money talks. You know, Trump himself came to the Gulf for his visit to take money to the US and invest. And Abu Dhabi told them, we're more than happy to invest, but bring your team into the country with AI. And this is where probably they saw the opportunity to jump in. I believe there is no politics in who is investing in who in these days. It's an open world. Money is being floated, but the majority of money, because we're raising funds as we speak, it's in the Gulf. The US, other than Silicon Valley, is drying. So anybody who is looking for serious money and wants return on investment, and we see a lot of eye to eye. I mean, in the Gulf, we have a lot of players who can actually squeeze these guys for the value of money. Not as easy as used to be. They do proper due diligence, and good luck, Habibi, they might not give you the money.
I just wanted to say, basically, it's interesting that Anthropic has been kind of like positioning themselves as well, basically, that they are the ethical AI. They have a lot of guidelines around safety. So maybe basically this is where the starting point actually came in terms of like, you do not want to take any money. But it's also interesting that they labeled the least money as non-ethical for them until basically they need you, as Amer said. This basically kind of like, you know, behavior or stereotypical mandate of, oh, we don't want to get into the Middle East until basically like, you know, make sure the money is ethical and all, or we like you, or we don't like you, but we like your money. That is something we really need to see less of. And last time, basically, when I was here, we also talked about basically discrimination and what's all happening. When it comes to the world of tech, really, it does not help to get into where we want to be in terms of future of AI and future of tech if we're going to basically like, you know, label the investors or label the foreign governments in terms of basically really ethical or not ethical. We're seeing NVIDIA, we're seeing Jensen in China nowadays. Before, China was an enemy to the US, and now we're seeing him actually in China and saying that NVIDIA is open to it and so on and so forth. At the end of the day, it really needs a collaborative effort. It needs us actually all to play in terms of having the future of tech really what we need it to be.
Like, I don't know how I feel about it personally, but I know I've seen this kind of conversation always struggle with certain founders. Do I take money from this person? Do I not take this person? Yeah, I know a lot of companies that do not take certain people's money, but I think when the leaked Slack messages, I think that's what adds salt to the injury, right? So, you know, when there are people talking about targeted names, I don't know who they were targeting about the bad or evil aspect of this conversation. I think they're now broken up into two people where he's like, I kind of have to take money from the GCC because pretty much every one of my competitors did. I know for last year, I know PIF and all these other big monster funds were very interested in invest in Qlub and what Anthropic was trying to do as well. So I know there was a very serious conversation, and I think because of the heat of governments and stuff like that, they didn't want to be like another TikTok, like what Jamie said earlier. So, but on a personal level, I think in that whole aspect, especially with the messages being leaked, that's gonna honestly it might also alienate them from future investments from other places. Yes, they will find somebody to give them money. The sad truth. They are obviously a top 5, I would say, one of the top 5 players in AI. I personally use their product a lot. I really like their product. This might alienate them into even, there's been a lot of this movement online of, belonging to a certain brand. And I don't know if that might actually alienate them from even acquiring users because of a certain belief or something like that. So I have a mixed feeling. I have a mixed feeling about every topic we're going to have to take. You know what I'm saying?
Let me stay with you, Abe. GCC has become the world's late stage investor, from Uber, Lucid Motors, Databricks, Mistral AI, and many others. But how can the GCC become the world's early stage investor? Is it like a risk appetite problem or just visibility and access issue? What would the Gulf-based early stage funds need to do differently to win early stage global deals? Like, let's say Series A and B, not always come at Series E and F.
This is a very good conversation that I've had this week with a couple of people. Okay, I'm going to say this. I don't know if it's right or not, but like this spray and pray approach, I think now it's going to wind down a bit because they need to start thinking about building the supply chain of what AI investments are, right? So a lot of people are, doubling down on the core 5 or the core 10, like if you add the mysticals and all of that in the conversations. But I think people are not even talking about data servers, the cloud, the energy that's going to support all this AI infrastructure, right? Because I read okay, don't quote me here when I say this, but I read something online last week where we don't even have half the global power to AI to power up the AI hardware. We don't even have the hardware. You know what I mean? So hardware is another conversation, right? So
we're talking about that next in the next news. But yeah, Meta is working on huge or mega projects in the US. X is looking outside the US for hardware. But let's go back to the funds here. How can they become early stage investors in global deals?
So that's the thing. So so what I'm trying to say is, with all of that, now they need to start really hunting for deals. You know what I mean? Like right now, I feel they were mostly tagging along onto big names. And I generally also think there was a lesson to be learned from Builder AI. So that's something that they don't want to repeat. But now, how do we bring in on board experts that can come and tell us, like, a company that is tiny, that is up and coming, that's the right, because we haven't seen any funds from the region. I'm so sure there's 1 or 2 exceptions that made an early seed or a Series A outside the region on an up and coming vertical or up and coming technology. I haven't heard that, Yani. There's been 1 or 2, but because maybe they know they have a connection to the MENA. The funds need to they need to go out there hunting, first of all. Number 2 is, I think the pipeline, because they're overwhelmed with a lot of pipeline from the local scene. And honestly, like, we get tons of decks and stuff like that. But it's nothing like when you ask, where's your data from or what is your AI? Honestly, it's not AI. It's just they built an algorithm, but they hasn't been tested and stuff. So I think there needs to be a bit of collaborations. They need to do the legwork, where actually go travel, see where, the pockets of where AI is really growing, certain parts of the world, and start taking riskier investments. Because these, when you give money to Grok or OpenAI or Claude, it's not a sure thing, but this is a company that's very well established. We're not talking about gambling.
Yeah, it's lower risk, but it's also lower return.
But in all fairness, the region, especially those investors, have never had that appetite to go into that Series A. They were always closers / final investors and stuff like that. They wanted the sure thing. Again, that's what I've been seeing for years and years. I would love to see more allocation to seed A, more B as well, because that's where the funding gap in MENA is. But I think that's slowly changing.
The question is the mindset there? I personally believe, and it's a hard belief, why would they want to do any of this startup / work / hassle. And you've been in that for a long time, Ahmed. They're not interested. They're used to people coming to them and asking them for money. And we have the likes of PIF, KIA from Kuwait, Adia in Abu Dhabi. They can pick and choose. And we saw the likes of Mubadala and other people who are starting to do early stage, but in their own countries, being from Doha to Abu Dhabi, and they attract brains to come and open up. If you want our money, you have to come and live in Saudi or in Kuwait or in Qatar or in anywhere. So is that something that I would like to pick your brains on for a second? And last but not least, the return, I've been fundraising for some time, and I've seen a lot of people who came and put when we were at 15 million, and I said, why? They said, because I didn't want to go into testing the water. I wanted to make sure that this is a viable context. So the question is, the Middle East investors ready to dip in early stage like the Silicon Valley? I don't think the Middle East is in the Silicon Valley era yet.
We're in a global economy anyway, even if Trump is trying to bring back tariffs for all the countries, but we're still in a global economy. It doesn't really matter where you live. It matters where the markets you're targeting are and what value you're introducing to the world economy. So for me, it doesn't really, for me at least personally, it doesn't make sense to me if you have to live in a specific country to get their money, but at least you have to give to that country. For example, invest in their own local companies or hire people from their local economy, from their local talent. This is, for me, this is enough to justify that, hey, we're giving you money. But at the same time, it's not only about the local economy. I want to participate in the global economy. I want to get the return profiles that A16Z get or Sequoia gets, or even the earlier stage VC firms in the US get from investing in high-tech frontier companies like Anthropic when it was at the Series A. Chada, what do you think?
I think just to add to this point here, Ahmed, that you're sharing, I think I do understand basically the perspective of the government or kind of like, the sovereign wealth funds when they ask for people to come in, which is actually part of building the market maturity. I mean, what you were saying, that the mindset is not there for the investors. One of the reasons why the investors basically are still not there is basically that the exposure to those founders and the exposure to these tech minds has not been there very close in terms of between the investors and the tech. And maybe from their perspective, it's more of like, okay, let us bring the talent in. Once we bring the talent, we're actually really supporting in terms of building the ecosystem, and the ecosystem is being pollinated with new kind of like, talent, new minds and all. And this would build the market maturity to the level of actually where we want it to be. And hence, basically those investors as well would be more willing and would be having better appetite in terms of actually investing in early stage. Obviously, yes, I do agree. We're actually in a global world, and like now virtual work is actually future work. But then also proximity helps in terms of actually building the maturity of the market. And for me, that's really what matters, is that for Middle East, what we really want to be, actually, we still want to see a level of maturity at both the founders and the investors level that would help and would kind of like generate more cash flow in terms of early stages as well.
Okay. So speaking of AI and Gulf Capital, let's talk about xAI now. Elon is heading our way, but he's not looking for a term sheet or capital. Jamie, what Elon is looking for in MENA?
Cheap energy. That's what Elon is looking for. And I mean, to put it bluntly, and look, that's what I think he's found. I mean, it's interesting, to call back to another one of the quotes from the leaked memo from Daria Modi. The median position across the other companies appears to be outsourcing our largest 5 gigawatt training runs to UAE. Saudi is fine. That puts us at a significant disadvantage. And look, Elon is more than happy to outsource that capacity, whether or not that has anything to do with his seemingly fumbling relationship with President Trump in US contexts. He's looking to jurisdictions afar. Saudi apparently is also looking parallel in talks maybe with G42 in a UAE context as well as another couple of African countries that can maybe supply cheap energy too. And look, xAI has raised a ton of capital recently. I mean, since we actually he published a story earlier this week. It's now revealed that it's in talks to raise another $12 billion in debt. And this is coming after just raising $10 billion at the beginning of July. So it's just extraordinary numbers. It's difficult to wrap your head around on one level. In the Saudi context, apparently it's evaluating two distinct partners. One of them is Humane, of course, which was launched to much fanfare a couple of months back. And then the other, the second unnamed partner, who we don't have visibility on exactly who that is yet, but apparently that second partner is further along in terms of their build-out journey, so potentially might be more attractive from that perspective. But look, they're following in the footsteps of OpenAI as well. Obviously, their project Stargate in a UAE context, and look, I'm sure they won't be the last. Although Dario has maintained that they won't be outsourcing that. They're just looking for the money from the region. They don't want to actually have to step foot.
I think I'll jump in here as an energy professional myself and kind of like no operator in the industry. It's obvious, as he mentioned, Jamie, that he's looking for basically for cheap energy. And not only cheap energy, by the way, cheap energy, and then also land that would support what actually those data centers need, like from energy, from fresh water, from basically like, having all the land that actually they need, and so on and so forth. And we know Elon, right? Elon being Elon, he's being pragmatic with basically where he gets basically his money from. He already raised actually from the region. This is not the first time. We've seen basically like even Oman pulling in with all of that. Basically, he's been kind of like having frequent visits to the UAE and raising from the UAE as well. So I think what is xAI coming into and the strategy that Elon is basically really having is that I'm going to be pragmatic, whatever basically makes sense for Grok to jump into the AI race. And we've seen very recently as well what Grok has been kind of like for them hallucinating with all basically what happened in Twitter at that time. So it's very important for Elon now to kind of like make some wins when it comes to xAI. Otherwise, basically investors as well are not going to be happy with actually the direction it's going as a company.
As Jamie mentioned, there are two options for Elon now. If you're in his shoes, would you choose the ready one, the smaller ready one now? Or would you wait until Humane builds their mega project? Would you go for speed or scale?
Very good question. I think in the context of AI specifically, right? If it was maybe another basically project that would have another answer. But in the context of AI, because the AI race is actually exponential, I would say it's very smart that actually he went both ways as a starting point. Why? Because one is strategic, one is government partnership, is like security, sustainability, and the other one is speed. I mean, starting with the speed would definitely be the right goal for me. Why? Because as I mentioned, the need is really higher. And as we go, basically in just 3 years from now, by the way, we would need 20 multiples of the compute power that we need as of today. What does this tell you? It tells you basically that as much as we can get from chips, from data centers, from basically what really builds that compute power, we'll take it. So this was actually a very smart move in terms of like starting with a small one, which is ready. This way we can push basically, and he can push the agenda in terms of the AI race, but then also having the strategic partnership with Humane is very basically point on, because this is government, this is basically sustainability, security, and the larger long run would actually benefit them as well.
Well, actually, data centers is dear to my heart because I worked closely with Equinox in the US, and they had 495 companies out of the Fortune 500 using Equinox, and Equinox themselves came to Dubai. If we're looking for clean and cheap energy, nothing beats the Middle East. I mean, me living in Jordan, I know we have abundance of that, where you get the best, less expensive, but we cannot invest a single penny. We can give you the land, you bring your money, we're more than happy to take it. But if he's looking at the region, definitely, I mean, the Gulf it is. I think he's late. Chada, I don't know where you got the 20x. I think we need the 100x. My kids, the other day, the fiber went off for 2 minutes as if we lost power. I mean, I kept getting calls every single minute till, fiber was back. And although they had, 4G or 5G, but the new Gen Z and Alpha are consuming data and using AI or ChatGPT. And I call, when people ask me the generation I'm in, I call them, this is Google on steroids. It depends how you use it. So the AI today is how you build the tools around it and what's in it for everyone. Everybody looks at it in a different way. But the challenge is, do we have enough people to do the chipsets? If you remember during COVID, what happened? Do we have enough servers around us? And I'm sure that people are innovating things that we don't know of. What you see on the surface is not what's going on in the background. Big challenge, big questions for the Intels of the world, what's happening and who's doing what. You might want to think of investing in the other side of the infrastructure rather than what you see in the front. So to be honest, I am not sure what's going to come tomorrow. If anybody tells you he knows what's coming, let me know, because I would like to invest.
How can Saudi founders, engineers, operators benefit from this mega project? And I'm assuming some other mega projects are on the way. Beyond just watching it happen from the sidelines, how do you turn this foreign-led AI project into real opportunity for local talent in Saudi?
I think not just Saudi in specific, they're attracting a lot of people to work, and they have the talent to work. So it's not just the infrastructure, it's the manpower. And it's for sure less expensive than having them in the US. They might need to attract from the region as well, because you don't have enough people to do that we know. But we need to train, we need to educate, and we need to get people to do the 3-6 months course rather than putting people for 4-year university that will be already obsolete by then.
I don't know how you guys are going to feel about this, but I think this is personal for Elon. I think he, what's happening politically with him, I think he felt left out when, there was the roadshow that happened a while back. And now he's just, keep in mind, I think he did already fundraise from this region before anyway. And now he's like, let's see how, what else can I add? I like this, back and forth conversation, him and his counterpart, I'd like to say, happening. So, and I think definitely it's a good move for him, because cheap energy is definitely something that he's looking into. And I like, we talked about it literally 10 minutes ago, talking about how, he's not only now looking for the core investment, but looking for something that supports the whole ecosystem. I think it's more honestly political than anything else, but he is going to get a good deal too. So that's, it's a win-win, I think, for everybody. And I know they're playing catch up on an engine level, because I personally do not know who's using Grok right now. I think I would say from the big ones, they are a bit late to the game. I've actually played around with it. It's decent, but again, I don't know how, like what kind of maturity it's on. I generally like what Llama does with Meta, where they have these open source models for a lot of tech guys to come in and actually download it, play around with it, and build a local LLM for a lot of these up and coming startups. We did run a program for Meta a couple of years ago as well, doing that. We had people use that model for things that you do not think that there was such a thing. So they were opening up, while then the other ones, their API and the cost of tokens was so high that honestly it was a huge barrier to entry to a lot of the founders, the seed stage / idea based founders that never really had an access to that kind of power. So they had to cook something until they got to a level where they can now have enough money to start playing with the real AIs and stuff like that. So I think Grok has a very good shot at competing on that level. If they're thinking, if they're going to drop the energy, they're going to drop all the costs. That means they're thinking of either going maybe open source, but maybe also, dropping the level to idea-based founders where they can get a lot more traffic. And I think that's something there that they can definitely look at, because a lot of people want to play around with it, but honestly can't afford. We were talking to a couple of founders that were saying they were paying $15,000 to $20,000 a month in just API calls to companies like OpenAI, like the product, like all these companies. So I don't know who has that kind of money to burn on just testing and building, right? So
You're basically saying this project might open up opportunities for everyone to use these this infrastructure, whether it's Grok or maybe something else, because I'm sure people will start competing, like what we saw in the Bitcoin miner gold rush, where a lot of people started Bitcoin miners in Dubai and Abu Dhabi and Saudi because of the cheaper energy relative to the world. And I think a lot of these data centers will also be started here. But let's switch gears to Qlub, MENA-born fintech scaling across 11 countries. Jamie.
Yeah, I've scanned many a Qlub QR code in my time living in the UAE over the past number of years. I don't know whether that says a lot about the ubiquity in terms of restaurants they're in, or if it says something about the number of restaurants which I've been to over the last number of years. Read into it, whatever you will. But yeah, look, one of the things that we mentioned already is the sort of funding gap which has existed in the region at the Series B level. So look, it's heartening to see a Series B funding round of this size as well, $30 million. And being co-led by Shrook as well, obviously MENA-based, also co-led by Cherry Ventures, both previously participated in past rounds. And also some interesting participation from EAND, so we have the telco link, and also Mubadala also. So we talk about sovereigns getting involved, how they typically wait until later in the day. So this is an interesting development as well. A small bit of context about Qlub was founded back in 2021. As I mentioned, it's a QR-based payment solution. So basically, it means that you don't need to talk to your waiter or waitress at the end. It allows you to kind of split the bill, etc., tipping, all of that kind of functionality. And as you mentioned, Ahmed, 11 different countries that it's present in. Obviously, you have the Gulf, but you have Singapore, Hong Kong, Australia, Brazil, South Korea. So it's reached far and wide up to this point. And I think the new funding is very much going to help them expand further into new geographies beyond that, whilst also purportedly enhancing some of the product and advanced analytics capabilities side of things as well. So look, great to see a Series B funding round for a start from the region. And I think the involvement of Mubadala especially, I think is interesting. Can't remember the last time they got involved in a Series B round for Sarawak jumps to mind, but that was a couple of years back. So I don't recall what the last one was beyond that.
I think Mubadala did a couple of fintech B series rounds over the last couple of years. So I think there's some champion of fintech in their organization, and hopefully that person can now drop them to a Series A, maybe, I don't know. And I'm very happy for the guys at Qlub, but because I actually got their seed deck, and I was telling a couple of people, big corporates and actually restaurant groups, to invest in these guys. And obviously that was, I think, us coming out of COVID, and people were like, no, they were in doomsday mode, I guess, or something. So I think it's definitely needed. I'm surprised they don't have that much competition. Like, I did not see a major competitor. I know that.
Wait. How come? So they're doing QR code checkout.
Yeah,
let's do that. It's such a feature.
The barrier to entry is very low. That's what I'm trying to say, but I'm not seeing.
And FedEx has 30,000 restaurants, and Qlub has only 3,000. Like, they have 10x the number of customers.
I'm not gonna talk about FoodX, but I'm like I can tell you from places that I've been in, whether it was Bahrain or was Jordan. I know there's a local competitor in Jordan. I know there's a local competitor in Bahrain, but again, like, I never saw in the UAE, it was either Qlub, or they didn't offer something like that, or it was just a basic OpenR, like Paul has it, but it's their own local in-house app, right? So like, they did not really outsource that to that level. Good for them. Hey, don't get me wrong. Like, that's something that they are really benefiting from, and they're really seeing success. And I know it also addressed a lot of topics in the actual culture of going out. You can split the bill, you can pay whatever you ate, and like, it didn't only address that aspect of the easiness of payment, but it also eliminated the social friction of you going out as well. So the pain point was really addressed with that. So I regret not investing in them, but it's a different conversation. But again, I don't think they were looking for me. They were looking for more strategic partners and stuff like that. And I know it was up and coming. And keep in mind, like Asia is huge onto QR codes, and so I saw that coming in anyway. So, but yeah, good for them, and I'm happy for them.
طيب Amer, what do you think first about the competition? And second, how did they grow to 11 countries?
I would second what Abe said about the competition. Barrier to entry is almost next to zero. QR code technology is very easy, and ideas are very easy, but I see a lot of times who is doing it. It's about doing it, because you see, ideas floating all the time, and you look at it, and as Abe said, you look at the pitch deck and you pass it because you get so many. I believe these guys believed on what they wanted to do. They had a great co-founder and a founder, and they went at it, persistent, and they expanded like there is no tomorrow, because 11 countries in such a short time is great, and I think they can go into another 10 easily. Asia, and even you look into the countries of Africa where people are looking to save or to check out, and the culture of the new generation splitting out. They don't want to pay, and the InstaPay, the clicks of the world helped them big time. Sadad. And so basically, I believe Mubadala saw an opportunity and they jumped on it. I know all the big venture capitals, or even basic, I've seen banks today invest in startups. Nobody wants to miss out on the startup scene, but they don't want to gamble. We need to remember that traditionally, these guys are not, their mindset are not set to invest in early stage. They are used to save money. So they do their due diligence, but now they are setting up most probably another division in their place. Adia doesn't invest in this for sure, but they probably added another 3, 4, 5 layers that keep doing this. And same thing for PIF, Kuwait Investment Authority, and so on and so forth. I'm excited, and I see a lot of growth in early stage startup, Series A, Series B, and scale up as well in the region. But I think it plays around the founder and the co-founder and how we're exiting, because everybody is looking for an exit.
Yeah, and I'm amazed by how the team was able to bring all of these investors. In this round, there's Shurukh Partners, Cherry Ventures, E&, Mubadala, Legend Capital, and in the previous round, there was Point 9, STV, Ra'id Ventures, Hardcore, Shurukh Partners, and FinTech Collective.
I think this is here where they say basically that investors invest in founders, right? Like no matter what the idea is, and no matter basically what's kind of like how novel the idea is, at the end of the day, it's really actually the character and the founder, and really those type of founders that actually invest in. And the guys in Qlub, they have proved that. So they did well, as you mentioned, not only in this round, but actually in the previous round as well, getting as many investors. And I think the interesting part as well in here is that actually this diversification of investors, right? We have CVCs, we have EN, we have sovereignty, we have Mubadala, you have basically like different type of capital. And that would always open doors for them and help them basically with the expansion. You were just asking how did they do 11 markets in kind of like short time. I think also, obviously, as usual, who you have as backers and as investors or in your board would definitely help you open up doors and markets in that perspective. But I think the guys in Qlub did it really well. Another point also I wanted to actually highlight in this is that this is one of the examples for Qlub that actually, like, we have technology that starts in the region, or some of the starts in the region. Now, actually, it's basically scaling up outside of the region as well. And I think as the market matures, we'll see more and more of that. And we definitely kind of like want to, I think the regional investors want to back something like that. They want to tag along with successful scale up when it comes to going outside of the region and so on and so forth. And they found basically Qlub to be the perfect match for that. So happy for them again. And we want to see more and more of that, I would say.
Why do you think it's important to tackle the payment on the table, not at the point of sale? FWDx, for example, is a point of sale company. This one is an app that you, as Jamie mentioned, you don't have to talk to anyone. You can just pay and move on. Although I like to talk to the people in the restaurant and socialize a little bit. But anyway, some people don't like that. So why is it so important to do that at that level, at the table level?
As a product manager, we work a lot on user experience actually. And I think this is part of enhancing the user experience basically at the restaurants. It's the idea or the novelty here comes from the fact that, by the way, it actually enables more productivity for the waiters, but it also enables better quality of service. So if you don't have to kind of like go back to the table and just basically take the check and they can do it themselves, you free your waiters to actually attend to those who are still eating or needing basically something else. And you are able to kind of like free their mind to have a better quality of service and to have more time as well. More than actually just in a table. Sometimes you take 8 to 10 minutes just kind of like splitting and, oh, the card is not working, or maybe let me try another one, or so on and so forth. So this experience is sometimes actually not that basically favorable, both from the user experience and then from the waiters. Yes, Ahmed, you like to talk to people and I like to talk to people, but some other people will I don't want to pay and I want to go out, right? So from that perspective, I think from the user experience, it really enhances the user experience in dining out. Plus, it frees up basically time and I would say bandwidth for better quality of service from the waiter's perspective.
Yeah, I was gonna say, but I'm like you, but depends on the generation. I believe, a lot. I see a lot of people.
Okay, I'm old. Okay, thank you.
No. All I'm saying, I mean, I was in the UK last month, and every table there was a QR, and I am like the old guys, like, check please, and she's like, sir, I said no, I want to see it, I want to inspect it, I want to do this, and she's like, you can do this on your app, but what you actually get sometimes is only the end bill, and they do make mistakes. So I think it's a matter of a habit. Probably everybody else will go to what you see now is just QR and lead. But what Chada said is 100%. It's time, and you will see that more in Europe because there is not a lot of waiters floating around, and now it's actually the service is going down. But in our part of the Middle East, it's a customized service. You talk to the waiter, you talk to him, he's upselling you, and he's looking for his tip, and so on and so forth. So this will be depending on it's more regionalized. There is no one size fit all, depending on the generation. And I could be wrong, but I don't think the check please will end. It will be depending on which generation is asking for the bill. It saves time, it saves money, and it's better for the owner of the restaurant, but it's definitely not better for the consumer if he decides he wants the other way. It's kind of like the QR and the menus. We saw the menus for the restaurants all went QR during COVID. Now all the menus came back to printed. So it could be a fad.
So I have actually I have a funny story about Qlub that I'd like to share. And that definitely it's Chada talked about user experience. I can tell you right now, it's definitely a convenience app because you don't have to wait for the check, especially in busy places and stuff. But I found something to add what Amer is saying. For the older generation, they really like it, especially in our culture where everybody wants to pay, right? So they just do that, and then they say, "Oh, don't worry, the bill has been taken care of." But I'm serious. Like this is
the fight.
They played on that cultural aspect, and by the way, that culture is available in Asia as well. So that's why I think you'd sneak in, you'd pay the bill, and they say, "Halas, it's on me now," right? So they kind of tackled two generational gaps, and I'm like Amer as well, where I would ask for the bill because there's a lot of times, especially in busy places, that they overcharge you over something, or you know what I mean. I do want to see it. Or sometimes I've been seeing because for a while, I don't know if this is now, but the percentage what Qlub also charged varied. So like on $100 bill, you'd see $4 or $5, and some people they're like, no, I want to pay cash.
Okay, for our last story for today, Jamie, you have news about a $300 million fund. What's that?
Yeah, 500 global. I feel like they've been making a ton of announcements recently as it pertains to the MENA region. Obviously, back in January, they rolled out 500 MENA, which is going to be that region-specific sort of growth stage fund. which is much needed, as we've already touched on over the course of the last hour or so. But yeah, this time around, they're doubling down on emerging markets, and they're using Abu Dhabi as the base to do so. So it's going to be 300 million into startups solving challenges like climate adaptation, food and health systems, fertility, digital infrastructure, gender equity, etc., across a variety of different countries. So in terms of the mandate, it's pretty broad across Brazil, the Gulf, India, etc. And in terms of who's going to be leading this practice, they've tapped Dr. Ala Merbis. She's a former executive at the Gates Foundation, and also one of the writers behind the United Nations Sustainable Development Goals as well. I don't have a ton more to add on that. I'm hoping to try to speak at Challenge 500 Global as well and see if I can actually try to get further information on exactly what this is going to look like. But in terms of, I think, the remit, I think it'll include investment like structuring and then policy advisory as well to sort of translate your like Saudi's Vision 2030, for example, into investments as well, and how exactly they're going to manage that.
Honestly, it doesn't look like a pure commercial investment fund. It's kind of both developmental and philanthropy and investment. But I'm happy to see that it's not just wasting money as grants. And here's the question: how do you balance doing good with making money?
This is not a very common for the GCC usually to have some kind of like development, yes, but on a grant level, like I see this especially when a lot of founders move from, the Levant, Egypt, and other places where there's a lot more grants available from one kind of project or another, and then they come in and land in UAE, Riyadh, and Qatar, and they say, "Where's the grants?" And they're like, "What are you talking about? Like, there's no such thing as a grant here, right?" So it's actually it is a fresh breath of air coming and talking about this, because we didn't have a lot of these projects that came in, or a lot of this money that come in to fuel the ecosystem, because keep in mind, we went through, the VC rise, a bit of debt came up, and now this is coming up, because the more options to funding is really the only path to growth for these startups. Obviously also business and contracts and POCs and all that good stuff, but we really going full circle when it comes to growth. Now, sustainability, I think, is a very interesting topic, but it's a very wide horizontal. They can do anything in that, and it's nice to see that, because then they can also look at verticals that have been honestly missing from our ecosystem or have not been getting that much love. So I'm very when I read this, I really wanted to get on a call with some people to see what are they actually doing, and how can we, how can I know more, because I know a lot of founders will actually jump on that as well.
From my side, what was interesting actually with this one is the fact that is coming actually, or the person who's actually heading this, coming actually from Gates Foundation, which is pure philanthropic kind of foundation. And now this is having like this mix that Abby and you, Ahmed, was actually, I would say, referring to. We have done a lot of work as well, actually, in ENTROGX ventures in Africa, right? And as we fundraise basically for the work that we have in Africa, it's sometimes, as you mentioned, either grants or development. And when we are saying basically that VC and so on, sometimes some of the fundraisers or of the eye that we get, it has also that kind of like, touch of development into it, right? Yet, basically here in the region, we have not seen any of that. The work on SDGs is huge. A lot of work basically already in sustainability and in sustainable development goals in general, with especially after COP28, by the way, and what basically kind of like the project that came along the way. But seeing it within the startup scene, it was more towards like the clean energy and kind of like, the climate tech, rather than other areas of sustainability as well, which is like, you can easily have sustainable tourism focus, you can have sustainable basically agriculture and all of that. But we have kind of like, historically being focused, and we say agri-tech, we say kind of like tourism tech, but not sustainable agri-tech or sustainable tourism, for example. So these areas now, with the SDGs tag into it, and with this fund, we will have actually kind of like more focus into it as well, coming from the region. And I think the fact that the capital is now focused in terms of like, here's a fund for SDG, I don't think it's going to be grant-based completely, or kind of like, just basically directly in terms of development. It will still have a focus as a VC. I mean, we know 500 Global, but at least the areas of focus or where kind of like the thesis is coming from, it has a different flavor than what we're used to. And that's actually exciting.
Well, I'm really excited to know how are they going to base that SDG factor into it. I know the World Bank does that a lot, or the IFC. If IFC is investing, that's a big, deep dive that they do. My question is, how is the IC going to look into this? When you go with your proposal, and how are they going to, give you your points and check? And sustainability and making money at this point is very hard, because you're sacrificing a lot of things on the money side to do the environment side. So it's a bit interesting, and don't want to say I am suspicious about it, but I am eager to see how they're gonna match A and D, because I see a lot of people when they try to fundraise from IFC, they walk away because of that point, not because they don't want to be part. They already have the 16 SDGs in their goal, but it actually brings down the P&L big time. So let's see how it goes. It's a good start, and we see a lot of companies like Zain and the big tech companies do get into this when they become very profitable. But as an early stage startup, we don't know.
And they're very ambitious in deploying the capital, $300 million in 2 years and across almost all emerging markets. That's a very ambitious goal.
They might have a pipeline already, Ahmad, and they just saw it probably because they've been around for some time. Probably they built a pipeline, and this is where they think it's the time to do it, or they just thought it's the right time, the right way, and everybody would follow.
Okay, for my last question or topic, I just want to talk about VC as a service. Y Combinator stayed focused on startup investing, while 500 and Plug and Play expanded into much more. They are like startups expanding into other products and services. They're serving multiple customers or client segments, from corporates to governments. I'm seeing a new trend, call it the startupization of VC, where a VC firm considers itself a startup, like maybe a money management startup or an asset management startup, where they start with VC, then they expand to multiple asset classes, or maybe expand to become a venture studio or build themselves, or build that platform so that they can help and support their companies even more and get to the next phase faster, etc. Should more funds act like startups with product market fit, monetization, distribution, and with a startup-like speed and scale, or stay lean and focused on investing in startups?
I think this one, Ahmed, everyone plays to its strength, right? So basically, we know, for example, like the Y Combinator is the Y Combinator. So it has their brand positioning. It has basically kind of like, the successful, I would say, lifelong storyline when it comes to that. So that's something for them has been kind of like making sense in terms of focusing and staying focused on actually what they deliver best. Even though we have seen YC doing a lot of changes and some flavors, I would say, that would add into that focus. We've seen kind of, for example, they had only one cohort per year. Now they're opening up more actually of that. Even when it comes to the verticals, they're doing more often in terms of the call out for startups. That list, that famous list that actually they offer, they are also actually releasing it even more and more. They did the startup school, for example, the startup school, which is something new. They have not done it before. So we're seeing a little bit of variations in terms of like for them not to be completely dead, right? But however, I think what they are doing is like they are playing to their strength. Their strength is basically on their brand positioning, on their focus, on like just focusing on startups. On the other hand, 500 Global and Plug and Play. Plug and Play, for example, started from the very beginning in terms of like, providing service to the corporates, right? It wasn't something that was coming like, in the middle or as a diversification of a product or something like that. Their strategy was more like, we're an ecosystem player. Wherever we are, we have funds, but then also we have an acceleration program. We also kind of like support the governments, and we support the governments and the corporates. So they had a different play from that perspective. And I think for me, it's like everyone plays to their strengths and plays to kind of like their strategy. Along the way, of course, they could add a flavor into it, but complete pivot, I am yet to see a complete pivot for VC as a service where someone started as something and then they continue to something completely different. There is this trend also in the region where actually we're seeing VCs kind of like coming into platform play as well, where more of like hands-on as well actually they are doing. Because they want the exit actually faster, they're getting more involved now. And hence we're seeing more of the likes of venture studios coming up. We are a venture studio ourselves, and actually kind of like from the very beginning, we branded ourselves as ENTROGX Ventures as a venture studio. But a lot of VCs now, they start as a VC, for example, and then they get more hands-on because they want the exits faster. So they're like, we build the platform for our startups. We give them more support in terms of tech stack or in terms of GTM or whatever kind of like play area that they are, or partnerships, for example, whatever play area they are more strong at. And they rebrand themselves as in like, you know what? We're not only VCs, we're not only actually put the money in, but we're also players and operators with you in that asset. So I think that aspect, yes, we're seeing more of as a trend in the region as well.
With Fikr Venture, we are actually doing a combination. So we're investing in early stage in edtech, but we're giving them all the support tools, not because we want to interfere, but we think there are three things that we can help. So we're talking to the Microsoft of the world, Amazon and so on. So we can give these startups the perks that doesn't burn our money. So $100,000 worth of, goods and services and so on and so forth. And we are appointing a board member from our side, and we insist so that he can give all that experience so they don't fall into mistakes, not because we want to be dominating, because that one line can save them $1 million.
Before we wrap up, a big thanks to Okta and Milkstra for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareokta.com. That is weareokta.com, and take control of your accounts receivable today. And if your AWS bills are getting you down, check out Milkstra. It can help you find hidden savings of up to 75%, freeing up capital for things like growth, hiring, or simply building faster. See how much you'll save in 60 seconds at milkstra.ai.
With that, thank you so much, Chada, Amer, and of course, Abe, who had to leave us. And Jamie, thanks as always for bringing us all these news.